Good to
go. Cool. Welcome everybody and good morning. The second Corporate Services Committee of this training of 2025. To commence, I will do a karakia. Takina te karakia, whaia te mataranga ki marama, kia whae take ngā mahi katoa. Tu maia, tu kaha, aroha atu, aroha mai, tātou ia tātou katoa. Just noting an apology from Kai Whakahaere, Francois Tumohoi, a mover and seconder for that. Yeah. All in favour? Aye. Carried. Declaration of interest, anything to come up on the agenda today that anyone needs to note? Take the silence as a no. Thank you, gentlemen. There are no public forums, petitions or deputations, so we'll move past that. There is also no late items, so we will move past that. Confirmation of minutes. Looking for a mover and a seconder based on the recommendation of, it is recommended that the committee resolves to 1, confirm that the minutes of the Corporate Committee meeting held on the 18th of November 2025 are true and correct. Andy, all in favour? Anything arising from those? Fantastic. Action. Yes. One item on the back of the agenda there. We will ask Joe to come and speak to us on that one, please.
Sorry, which one's that?
One.
Oh, that's the one around the reporting. Sorry, I don't have the paperwork.
Are you reading one?
Yes, so we are intending to do a full properties report to you around the maintenance requirements and the proposed capital plan for this building, for the facilities here. However, we are still waiting on the review of the builder. So the builder has looked at the all of the property, came through and spent quite some time looking at it, but we're waiting on his report of what he recommends that we should be doing from both the maintenance and the capital perspective before we bring that to you. So at this stage, there is not really any update. It's ongoing, and hopefully we will be able to get something to you very soon because we need to get it into the annual plan.
I don't mean to be rude, but can we have a rough time frame on very soon?
So the concern that we've got is that the review was done in about October and we still haven't been able to get anything because the builder's really busy. He's also said he's not available to do any work for us until March. So we're kind of in a holding pattern, but I would hope I'll be able to bring it to you.
Thank you. Anything else from anyone else? Looking for a mover and seconder based on the recommendation. It is recommended that the committee resolves to 1, receive the action list and information notes.
Alan, move that.
Second beer mark, thank you. All in favour? Thank you. A very brief verbal update from the chair. I just want to take this opportunity to thank the corporate services team being that we're in the corporate services committee meeting, but also all the regional council staff and Daryl as our CEO for the year that's been. It's a big year ahead. It was a big year this year. So just wishing everyone well for the festive season as they get to spend with their loved ones doing the things they love. Also just wanted to note, I attended the staff Christmas function briefly on Friday afternoon, and it was great to see the beautiful space at the back utilised well. One of the staff members was playing the music, gang of the staff were cooking the food caught by half the team. So a fantastic spread and great to see the space and the team having a good time. Looking for a mover and seconder for that. Cool. Thank you, team. All in favour? Aye. Thank you. Report, item 9.1, quarterly treasury report. And sorry, we also have Miles O'Connor from Bancorp.
Yes.
With us as well. Miles.
You can hear me all right?
Yeah.
You've got the report in front of you, I take it?
Right. Yep.
So look, I'll just give you an update that what has happened since the end of September, because you've obviously read the report, but quite a bit has happened actually. In the US, the US Federal Reserve last week actually cut the Fed funds rate by 25 basis points. There was some pushback to them actually dropping the rate, but it just seems like some of the economic data that's coming through in the US is not quite as positive as what they previously thought. But so that's as far as short-term rates go. But US long-term rates have been pushed up and is sort of slightly being held up at the moment by fears of the extent of the US debt, which has been a problem for years and years. I mean, the only president actually, it's just increasing. The last president to actually run a surplus was, I think, Clinton back in the late 90s. And US debt increases by, David, how much is it? $6 billion a day, is it?
Yes.
Yeah, the US debt's actually increasing by $6 billion a day. So, that's a pretty frightening number. So, when the total debt is now getting closer towards 40 trillion, markets is getting a little bit, weary about it and, what can be done, although what can be done about it, because I say it's been a problem for just about since the Second World War with it increasing, that the only way really out of it is to inflate your way out of it, which means grow the economy, or the other way is to retrench and just stop spending. Well, and then that has implications for, social activity. Well, that has social implications. But probably more I think what's more interesting is what's been happening in New Zealand. So 2 weeks ago, the Reserve Bank dropped the cash rate to 2.25%. So that meant that it had fallen 3.25% since its high back in August last year. It's the second biggest easing cycle that we've ever had. And the only bigger one was in the GFC, when it was 5.75%. It does, I know it's historical and it's looking in the rearview mirror, and with the benefit of hindsight, all those sort of euphemisms or anachronisms, but it does show that the Reserve Bank kept it too high for too long, because back in May last year, they were saying it was likely it would have to increase. They changed their tune a little bit in July, and then in August, they're cutting the cash rate. In May last year, they were forecasting the first cut to occur in this quarter, so 2025. But in fact, can you still hear me?
Yeah, sorry, Miles, just got a question from the floor for you.
Yeah, Miles, Marky, how you going? Why did Westpac put their rates up then, with the bank bill rate coming down? What's the reasoning behind that?
Very good question, because term rates have been going up. I was going to come to that in a minute, but I can jump through to it now if you like. Well, no, I'll just keep going on this one because it sort of feeds into that. So and then they had to start. So in May, they said the first cut would be November. In the December 25 quarter, the first cut actually happened in the third quarter of 2024, back in August. So that just shows the extent to which they got it wrong, and the economy has been paying the prices and is continuing to pay the price. Now, this is sort of partially out. This does go towards answering the question. When they cut it to 2.25%, previously when they'd been cutting, they were stating that it was likely that more cuts would be needed, to stimulate the economy. Now, in the last one, they omitted any reference to that, just saying that any further cuts or further monetary policy action would be data dependent. So not saying that there may be further cuts. In other words, that could be the end of the easing cycle. So what the markets did was that they started pushing. Well, they'd already slightly pushed up some of the swap rates, the term rates, but they have risen as dramatically as I've seen them rise for a long, long time in the last 6 weeks, but particularly in the period since the OCR announcement 2 weeks ago. Just to give you an example, the 5-year swap got to a low of 2.92%. I think it was at about 3.1 when the OCR came out. When the OCR was dropped, it got to a high of 3.87% yesterday. It's back down 3.77%. Sorry, it's back down under 2.7. It's about 2.65 today because we got some weak data out. So, if this doesn't sound too confusing, short-term rates are totally governed by the Reserve Bank, and they set the OCR. All it can be is what the Reserve Bank say it is. The 90-day rate follows very closely, and it's very closely correlated to it. It does fluctuate up and down according to if we're in an easing cycle or a tightening cycle, or if the markets, or if the interest rates are staying the same. But swap rates, the term rate, and these flow through to the wholesale rates that you're referring to. That's more at the whim of the market and what the market wants to do, because the Reserve Bank can't set what the swap rates are. So what the markets have done is they've taken to pushing up these swap rates, wholesale rates, and therefore the mortgage rates, because the mortgage rates are predicated off them to some extent, because they think the end of the easing cycle, we've had the end of the easing cycle, we're going to start a tightening cycle. But I'd have to say that, as I said earlier, the speed of the move up, and all it's been done, it has been influenced a little bit by what's been happening in Australia, because they think they might actually have to tighten now. So we have been sort of caught by our association with Australia. But but actually one other thing, on the day that the OCR was dropped, Australian inflation came up very strongly, and also we had very strong retail sales data. The markets were expecting a 0.6% increase, but the increase actually in retail sales in the September quarter came in at 1.6%. So some strong economic data. As I said, that was countered yesterday by a weak purchasing a PMI, which is Purchasing Managers Index for the services sector. Services is always accountants, people like us. No, it's not manufacturing. So these swap rates have been pushed up by the expectation that the next move will be a hike. But the markets have just taken this beyond anything that I've seen before. And it's also been exacerbated by the fact that the market is very illiquid and thin, and therefore moves in swap rates have been exaggerated by the lack of liquidity. If I were to do, sorry?
Keep going.
No, I was talking.
So that's why those mortgage rates have gone up. So you've got to characterise it here is that short-term rates have come down, that long-term rates have gone up. Short-term rates dictated by the Reserve Bank, medium and longer-term rates by the Reserve Bank, by the market, sorry, by the market, and they're pushing it up. But interestingly, the cash rate normally does not go up for 12 to 15 months after the last easing, after the last cut in an easing cycle. So you would expect it to stay here for at least the duration of 2026 before there's going to be an increase. So does that answer the question why medium and long-term rates and therefore mortgage rates have gone up while the cash rate is falling?
Yeah. Kinda. Turn around that way, eh?
Answer your question or no?
Yeah, no, it is sort of. I reckon they're ripping us off.
So I couldn't catch
Yeah, you're good to proceed.
that. We don't expect this move to be sustained, and we actually expect these swap rates to go down again. I mean, we can't justify them being up here. And I expect there will be a correction to this upward move, not back to the lows that we saw, maybe halfway back towards the lows. As far as West Coast Regional Council is concerned, the good news is that we've done quite a bit of hedging. So there's no policy-driven need to do any further hedging, and we don't have to take out swaps at these what we would call elevated rates. You've also got a reasonable exposure to floating, and we expect the cash rate to stay where it is, in other words, the floating rate, for at least 2026, or a lot, if not all of 2026. So you will continue to benefit from that low floating rate. And if these rates do come down, we may look to increase the cover, but certainly wouldn't at this stage. And actually your cost of funds, your projected cost of funds, which is on page 4 of our report, which is interest rate risk management and metrics, shows that your interest cost is going to be relatively stable over the next 2 years. Your cost of funds has come down a lot. It's at 3.99%, and that's because we have had a reasonable exposure to floating rates, and therefore that has a beneficial effect on your cost of funds. that's me in a nutshell. I'm perfectly happy to take questions, but that sort of is the summary that I've got.
Mark's question around the mortgage rate was one I was going to ask Miles, but you've answered that, so that's all good. Anything else from the board?
We're in a pretty stable position, aren't we?
Stable position, and we're compliant with all
Yes, they
metrics in our policy.
Nothing else for Miles?
Do you reckon the rest, Miles, do you reckon the rest of the banks will take the same approach, or do you think Westpac will quick out of the blocks?
I don't work for
Same,
a bank. Unfortunately, I'm not privy to what they're thinking. I think there might be an element of let's just wait and see if this is going to be sustained or if it's going to be a correction back downwards. But that really is up to the individual banks. If they want to see if they can get a bit more market share, they might hold off increasing the rates.
Nothing from anyone else? Cool. Looking for a mover and a seconder for the recommendation. It is recommended that the committee resolve to 1, receive the report and note the attachments. 2, note the following activity with GFA. A, the $3 million LGFA commercial paper debt that matured on the 30th of October 2025, third term, maturing the 30th of January 2026.
You can.
Thanks, Mark. All in favour? Thank you. We'll move on to item 9.2, the West Coast Regional Council Investment Portfolio Update. We've got Chantel alongside Tom Phillips and Phil Borkin from JB Weir presenting to us on this. Hand over to you guys. Thank you.
Just getting your presentation up, guys.
Great, thank you. Good morning, all.
Morning, Tom.
Look, we've got a presentation which
Here's the rooster with him.
coming on the screen shortly. So I'm not sure if some of you may have met Phil Borkin. He's our strategist. So I just thought, given what's going on globally, it'd be good to hear from Phil directly on what our current views are, particularly around the US market. So who's got the controller there?
Me.
Oh, great. Can you flick over to the first page, please? So look, this just shows the performance since inception, but the bar on the right is probably the most relevant right now. So it's the performance from the 1st of July, start of the financial year, to the end of November. And in summary, the portfolio is up about 7.5%, or in dollar terms, about 1.1 million. So it's been a really solid start to the financial year. What's gone really well for us has been the offshore equities, which are particularly strong. So they're up 22% over that period. The benchmark's at 16. So, overall, that's a really strong start to the year. So, Chair, are you happy to take questions as we go through, or do you want to do them at the end?
If we go through, if we can.
Okay, that's good for us.
I'll just let you all know that this presentation is for 30th of November, whereas the stuff in your packs are 30th September, so we get an up-to-date update from these guys.
Yeah, thank you.
Okay, yeah, thanks for that. So this chart here, again, just shows the portfolio since inception. So for those of you that haven't seen this chart before, the way to read it, just seeing the blue bar shows that, in effect, the portfolio's increased by about 6.5 million over the last 8 years. The red lines show the withdrawals from the portfolio, and the green shows any deposits. But net, the portfolio is up 6.5 million over that time period. And you can see over the last, 2 years or 24 months, the portfolio's had an extremely strong period of growth. Next slide, please. This slide is really just showing your portfolio position and, importantly, your SIPO settings. So confirm there's no SIPO breaches, and there hasn't been since we last presented. I think the key point here is, SIPO states that we should have a 50% allocation to defensive assets, or what we, cash and bonds, being domestic bonds and global bonds, and a 50% weighting to growth assets or equities. We're currently sitting slightly over our growth weighting at about 53% versus defensive at 47%. And that's really based on our sort of constructive view of equity markets. And also, given the cash rate, as Miles alluded to before, is down at 2.25% and possibly heading to 2%, and bond rates are obviously dependent on where the cash rate is. So we're really not getting compensated for holding a lot of cash at the moment. Hence, we're underweight cash, we're overweight equities, but no SIPO breaches there. Then over the page, I might let Phil sort of talk to a couple of these slides, and maybe we don't have to go through them all, but pick out some good ones.
Right. I wasn't going to talk to the slides, but please, if there's anything in there that you'd like to talk to, please reach out. So I think, just in the interest of time, like clearly as Tom's highlighted, 2025 has been a rewarding year for investors, but it's also clearly been a very eventful one with a lot of shenanigans. And I suppose you can see that on the slides. We've clearly had a US administration that's come in and with a kind of a move fast and break things mentality, with trade policy, Fed independence, Elon Musk and his antics with cutting costs out of the US government. It's all caused a lot of noise and a lot of uncertainty. Yet, equity markets, financial markets in general have had a strong year. And the way that you can kind of square that circle is that ultimately the global economy is still fine, right? It's weathered the tariff and the uncertainty very well. The US economy is growing around 2.5%, which is about its trend rate. The global economy more broadly likely to grow around 3%, which it's been its average rate for the past 10 years. Inflation has been trending lower. Central banks generally have been friendly. The macro picture has been quite resilient. And with that, corporate fundamentals have been very healthy. And then on top of that, you've also had obviously the excitement around artificial intelligence and that build out of the infrastructure required to develop this technology. And it's clearly a massive market theme. Touch on our views on that in a second. But it's also now becoming a very, very important economic theme. And you can see that bottom chart there, if you can hopefully see that. That shows that the contributions to growth from kind of development to technology investment, so software, other IT investment, made a massive contribution over the first half of the year in the US. Depending on how you cut it, you could maybe make the case about 2/3 of the growth in the US economy was related to this AI build out. So yes, very important for markets, but it's also very important for the growth picture now.
I got one question.
When I think into, sorry, was there a question?
Yeah, I got a question. Tom,
Yeah, sure.
What was your name again? Sorry.
Phil.
I just see that the tariffs haven't made the biggest impact we thought they would with the US markets. We thought it was going to be a lot worse for New Zealand. Is it 12% or is it 10%?
10% now, roughly. And that's right. Like, the US is an important market for New Zealand, but not a meaningful one in terms of, say, compared to Australia or certainly China in terms of the size.
No.
The US is an important market for tourism and things. So that's where I suppose we get most of our expect dollars when we think about the US. Look,
Is it 10% going forward, or is it?
Well, that's a great question. Who knows?
Okay.
And that's one of the uncertainties heading into next year. Is clearly there's a court case at the Supreme Court around the legality of a lot of these tariffs that Trump has put in place. And I'm no US legal expert. I think there's a reasonable case that, from what I've listened to, is that they do actually prove to be unlawful, and that the administration might have to look at other avenues to put these tariffs in place. And look, I think at the end of the day, the tariffs are going to stay in some shape or form. It just might be different forms. They're just messy. That's messy. So I think the point you made right at the start, and you could make this not just about New Zealand, but the global economy in general has weathered tariffs very, very well, more than I think anyone would have thought. And part of the reason for that is a lot of corporates in the US haven't passed the costs on. They've thought, let's just take the gamble that these are temporary. Let's wear it on our margins or find other cost efficiencies to try and counter them. And so inflation's been more contained, growth's held together. I think if we get into next year, and depending how the court cases play out, if tariffs have kind of proven, okay, they're actually going to hang around a bit, it'll be very interesting to watch how inflation behaves. If firms actually go, look, you know what, we're going to have to start passing some of these costs on to households, and inflation proves sticky. That's a big unknown heading into next year, but one of the things we're watching.
Thank you.
But so I suppose you're just thinking about next year. It's a good segue. At the risk of sounding lazy, we actually think 2026 is kind of going to be a more of the same type of year. Like, there's clearly going to be noise because we've got Trump in power. Like, I don't think we can avoid that. But our base case is that the global economy, again, proves pretty resilient. With the AI stories very much there as well. Inflation, like there's some uncertainties there, but in general, we think it's going to be well behaved. And more or less, we think central banks, there's some exceptions to this, don't get me wrong, but more or less central banks are still going to be friendly. So we still think this, especially in the US Federal Reserve has got further cuts to go, which is a pretty favorable backdrop for the global economy and hence financial markets. The one, I suppose, caveat to all of that is it's not lost on the market, right? Valuations are clearly elevated, embedded expectations are high, and so that just means there's less room for error. And so when we're thinking about portfolio construction and where we want to be taking active risk and how much conviction we have in forming positions, our mindset very much at the moment is constructive, but being aware or mindful of where the banana skins could be. What could cause the market to slip up? Because when you've got an environment where valuations are not low, then there's clearly risks that you get those outsized or those larger moves if you get any disappointments. And so that's where we're thinking about how we're constructing portfolios at the moment. It's being mindful about position sizes, wanting to be very, very diversified, and still having that kind of balance of exposure to exciting growth, structural themes, but also the defensive quality. Because look, who really knows what we're going to get thrown at next year? We think it will be okay, but look, clearly there's going to be surprises, just like 2025 had. On the AI story, especially, like I think that's really it's a really, really important story. Is it a bubble? That's a very provocative question, because what is a bubble really? And I think the way we think about bubble is irrational exuberance and speculation. And while I think there's pockets of that, and you look in some of the private markets, so not in public listed equities, but some of the companies very much involved in AI, like OpenAI, so it's ChatGPT or Anthropic, some of these private players, their valuations do look quite stretched, and these companies aren't making any money yet. So there's clearly some risks there. When we go to the public markets, so what you're exposed to in your portfolios, again, valuations are high, but fundamentals still look very, very good. And this build out of the technology, so the semiconductors, the data center providers, the electricity generators, all this infrastructure that's needed to develop and enable this technology, there's still plenty of momentum there. And so we still think, look, yeah, valuations are high, so that means there are risks, and the risks are evolving because there's a little bit more leverage and debt funding needed to fund this massive infrastructure project. But with fundamentals actually still probably more generally surprising on the upside, we think there's room to go. But we're certainly kind of monitoring those risks. And so like I said before, when we're constructing portfolios, we're very much aware of where the risks are, where the correlations are, and kind of taking profits where we think is warranted to ensure that, yeah, we're kind of being disciplined in the way we get exposure. But in terms of the AI story itself, valuations high, yes. Are they unjustified? We don't believe so. The risks are evolving, and we're monitoring that, but we're not in the camp that we're yet in a bubble. That might come, don't get me wrong, but we're not in that camp yet. So we still think it's very much a theme that's going to dominate, especially US markets next year. We want to be involved. We want to have exposure to it because it is exciting. We do see adoption rates increasing and signs that productivity is starting to improve on the back of it. So it's very much a theme we believe in, but we also got to be mindful of the market not getting ahead of itself. And so just being disciplined in the way we get access to that theme. But more broadly than that, look, we think the New Zealand economy is turning a corner. I hate the term green shoots, but we are seeing some improved signs. I know in rural parts of the country, like where you're based, things look better than they do up here. But the fact that the Reserve Bank has obviously delivered a meaningful easing cycle, we've got rural incomes are pretty good. Commodity prices are generally still elevated at a time when the currency is very favourable. Financial conditions are supportive. So the conditions are there for a recovery. It's just we don't have clear signs that it's taking hold just yet. We expect that, but we're watching that. So I think, and I just kind of echo what Miles said as well around this movement in wholesale interest rates in New Zealand. I think the market's got far too ahead of itself and starting to, like the end of the easing cycle might have happened, but that doesn't mean hikes are about to happen either. We think that the Reserve Bank is going to be in a period of keeping rates low. We wouldn't even rule out the fact that we might need further interest rate cuts. Not our base case, but that's a possibility. But very much hikes are not part of the conversation yet. So those conditions should help drive a more broader economic recovery next year, and so that should flow through into better performance from our little old New Zealand equity market, which has been a kind of the ugly duckling for the past few years. We are starting to see some better opportunities and prospects emerge there. And the market's not as expensive as some of the markets you're seeing offshore. So yeah, global economy, resilient, expect that to continue. The AI story, we're monitoring the risks, but don't believe it's about to kind of end anytime soon. And then we're relatively constructive on the outlook for New Zealand, and hence New Zealand equity market. We think there's time for some better prospects there. So
Thanks, Phil.
I've got a question. Just we're talking that we're seeing some improvements in the economy. Most people and most of our community will possibly, like you said, rural places are sort of being less affected or being faring better. But people are still doing it pretty tough, and they'll be getting frustrated with all the people saying green shoots. I know you hate that sort of terminology, but is there any truth in easing cycles? Like we've just had this OCR cut. Does it take about 12 to 18 months for these cuts to actually filter through and impact people on the street? Is there any truth to that?
Yeah, no, it's a great question, and yeah, like the transmissions are always different, and it obviously depends on which part of the country you're in and what industry. But yeah, for households in general, for mortgage holders, it takes that amount of time generally, and we've had a meaningful easing cycle now. Yes, I know fixed mortgage rates have started to creep up again, which Miles touched on. But the average mortgage rate has still come down, and I think I can't remember the exact numbers, but there's still a meaningful amount of borrowers that are due to refix their mortgages over the next 6 months, and they will be refixing at lower rates. So this is why I say, yeah, you're absolutely right that it's still tough out there. Like the cost of living has not come down. Inflation went up, the price level went up, and insurance, food, local authority rates have held at high levels, and that's eaten into households' discretionary cash flow. What is the missing ingredient to make people feel better? Certainly in the major centres, it's the housing market kind of inflecting a little bit higher, so you start to see wealth improve again. That's been a missing ingredient. And the other, probably even most important one, is the labour market. And the labour market's been pretty soggy in New Zealand. We're seeing signs that firms are starting to advertise jobs a little bit more, and that's the starting point of them then looking to hire and build up their labour force. So yeah, it very much is an early stage, and it will feel patchy, and everyone will take a while to feel the benefits of it. And I think the risk is that if we see markets start pricing interest rate hikes too early, it will snuff out all this signs of positivity. So hence why we think hikes are going to be, I think if I was a central bank governor, and I'm not, so forget this comment, but I'd rather be wanting to make sure that recovery is entrenched and well established before even thinking about rate hikes. And so that's how we think about it. And then yeah, so it will take time to come through and for the person on the street to benefit from it. The labour market is a key part of that. Very early tentative signs of improvement there, but it's very early days.
Thank you.
They're singing exactly the same song across the ditch too, and it's probably at the same stage of the cost of living, labour market, interest rates. It's all exactly what we're hearing here on the media. Same state.
The dairy commodity prices turned the corner and on their way down too, Phil.
No, that's right. Yeah, there were obviously great payout last season, and then the risks are easing off. Now they're obviously still at a high level, and the currency's still helping to cushion that blow a little bit. But yeah, we've got to watch that outlook for commodity prices, because that has been the clear positive for New Zealand over the last 12, 18 months, is that dairy, even the broader primary industries have had a nice period of farm gate returns. And so if that turns, and you're right, that prices have come down at a time when kind of the big centres are still struggling a little bit, at least in Auckland and Wellington. That's certainly an input that if I was a central bank governor, I'd be mindful of as well. So no, it's a great call out. And I'm not a commodity price forecaster. I couldn't tell you where global dairy prices are going to head, but it's something we're monitoring as well, just to kind of, if that snuffs out, then that changes the risk a little bit too.
Tom, with a 4% cash percentage of the portfolio, is that standard for this portfolio, or is this just to hit the SIPO requirements, or we're a bit more liquid than we have been based on current returns, or where does that sit in line with, I guess, a longer term view of the portfolio?
Yeah, no, so look, we're sitting at, we've got a 3% weighting to a current weighting to cash in the portfolio, and the benchmark is 5. So we're underweight benchmark, and that's a targeted tactical tilt to be underweight cash. That would be normal for us to hold 3% cash for ordinary liquidity purposes if a new suitable bond comes along, or if a company does a rights issue. So we're sitting well within our realm of where we would expect to be for cash.
It's also kind of because, we're expecting more volatility next year in markets too. And as you probably would have seen, if you've monitored your own investment portfolios or KiwiSavers and things, it happens quickly. And so having a little bit of cash on the sidelines gives us that ability to be a bit more nimble when the market presents these opportunities. So, if we see question marks over the AI, or there's a bit of weak data in the US, which raises recession fears, you might see some weakness in equity markets, and we could use the cash that we have to take advantage of those opportunities to re-enter the market.
For clarity, can I have a breakdown or a rough breakdown of the alternative investments, 150,000 worth?
There's only one, and it's a salt long short fund. So it's been in there for some time. So it's $160,000 worth exposure. It's a fund that essentially will make money if the market goes up or down. So it's an equity exposure, but it's got what we call a market neutral exposure. So it's effectively net market position is 0. So the fund makes money if the market goes up or down. So that's what it is.
And the small stake in property, similar thing, historic piece, is it?
In the property holding, there's only one listed property we hold, which is Goodman Property. And so we view sort of property as a subset of New Zealand equities, and it's just simply been certainly in recent times, we think equities, listed equities like Fish and Wildlife, Healthcare, Infratil will give us a better risk-adjusted return than holding listed property. So we've only got one exposure at the moment, which is Goodman Property Trust.
Thank you. Any other questions from the floor? Nothing else from you two?
No.
Actually, before we move into recommendations, I thought possibly good for those who don't have the context for that conversation we had on Friday around the establishment of the portfolio, where the funding came from, when, and that would be useful for those who don't have that context.
So for those who don't have context, where the funding came from was back in the day with tree felling and those rights. The government passed a thing we no longer fell natives, and they put some money on the table, and that money was divided by 5 entities. The bulk share went to Development West Coast, and then each of the 4 councils received a sum to do with and invest or whatever they decided to do. This council decided to put it into a portfolio and use the proceeds from the portfolio for various things, such as potentially reducing rates impact on our community. I understand that Regional Council is the only one of the councils that still has the fund intact, and that's what we're using it for. Is that enough?
Yeah.
So there was a forest core change.
Yep.
Apologies, I didn't know the right term.
The funding that, the interest funding or the return funding, so basically the council is using the return on the fund, not the capital asset.
Not there is that we use returns on the fund to subsidise.
And what sort of things has the return on the fund been used to date?
I'm sorry, I don't have that information at hand, but if you would like.
I don't think any of it's been used. I think just accumulated it.
Like, so
Last withdrawal was 2020, first quarter 2021.
It's in here. Here you go. It's in, so that the withdrawals are the red and then deposits are in the green. So I'd have to go right back and find out what all those were for.
Okay,
You wanted
sorry.
to know.
Mr. Chair, can I try to help that one?
Please.
Please.
Yeah, there was for a period of time, there was a policy from council to withdraw, I think it was $350,000 each 6 months. I'm not sure why you did that, but I can only assume it was to subsidise other activities. And then that last one was my recollection was that it was stopped in 2021 because councillors wanted to grow the portfolio. So that's the best of my recollection. Why you have to withdraw since.
thanks for that. Good.
Chairman, I wonder if I can make a comment here. That's correct. In my time, there hasn't been a draw on this fund. The decision at the last council was to keep returning the interest back into the fund for compounding reasons. The last council, particularly the last chair of the corporate committee, the late Frank Sinley, was quite happy with returns on the fund. And when you compare the performance of this fund to the interest rates that we're getting our loans on, made more sense to leave the money in here than to actually mine this fund and actually pay off any debt at the moment. Yeah. Now we have to be vigilant to that. And then the final thing was that the financial strategy of this council was to move aggressively to ensure that by year 4, and that needs to be retested with our financial forecasting next year in LTP, to ensure that it's paying, that it's covering its operating expenses by its income. Okay, so that was the financial sort of strategy with this portfolio and our revenue and loans.
Thank you. Anything else from anyone else?
Good.
Cool. We'll move into the recommendation. Looking for a mover and a seconder for the recommendation. It is recommended that the committee resolve to 1, receive the report and note the attachments. Peter. All in favour?
Aye.
Great. The next motion on the table is to ask the media and all of the public in the room to leave and online. As we go into public excluded. Thank you very much, gentlemen.
Merry Christmas.
Merry Christmas.
Yeah, you too.
Looking for a mover and a second for the recommendation that the public be excluded from the following parts of the proceedings for this meeting, namely agenda item 11.
Move.
Thank you. Thank you. All in favour?
Aye.
Cool. Stand by whilst we do whatever we need to do with the live stream. Awesome. And we will declare the meeting closed at 12:03 p.m. Thank you, everybody.
Thank you.
So welcome, and it's great to meet the new councillors as well. Thank you. Yeah. Any moving straight through, the only apology I've got is Francois. Just have someone to move his apology. Second. Thank you. All those in favour?
Aye.
Against, if any, carried. Declarations of interest, any items of it, conflict within the agenda items anyone needs to raise? If anything comes up along the way, please just let us know at the time as well, and we'll add that back. No public forums, petitions, deputations, and no late items. that I'm aware of anyway. Thank you. 6.1 actions list on page 1 of the agenda papers. Welcome to the table. I'll hand over to you to talk us through the matters outstanding.
What I'll do is I'll go through actions that relate to myself and those that relate to Joe Fintigoza.
Okay, carry on.
So the only actions for the first we've got complete. Action 1. The second action, which relates to contingent liabilities. As at the 30th of June, 5 will be at the Commission report, annual report. Schedule that reflects liabilities as well.
Thank you.
Okay, the remainder of the actions, they all complete.
Thank you. Any questions from councillors? If not, we've got a recommendation that we note the actions outstanding from the previous triennium that are ongoing and remain relevant, and we receive the list and the information has been provided by staff.
Move.
You're happy to move? Thank you, Chairman. Thank you. All those in favour?
Aye.
Against, if any? Carried. I don't have a paper really for items here, but we're in a fast-moving environment with what government moving. And there's just so much change happening, and I think we've just got to keep focused on our ratepayers and what's best for them, and we need to put their needs ahead of any personal feelings we might have, if indeed councillors around the table and potentially myself end up being unseated. You know, we're here for the ratepayers, and we just got to keep that at the front of our mind and what their best interests are all the way through. I see we've added a new risk 215, which we'll deal to a little later in the papers. In the public excluded section, just looking at the implications for our ratepayers in this area. Making sure that the levels of service that we can continue to provide along the way, despite all the sideshows and distractions that will be going on around there. There's I just report that yesterday I had a session with Wayne looking at the river structures from Franz Joseph up to Wanganui, and that was certainly very informative. This is part of my commitment I made when I was taken on, that I'd spend a few days really getting to know what's going on and not just being a chair of the audit and risk who sort of looks from afar, not like getting my feet wet and hands dirty along the way, because that's the only way you can really understand what the issues are. That was very informative, and we certainly touched on a wee bit of it in the workshop this morning, of the issues and various schemes. Other than that, I've got no further comment to make unless any of the councillors wish to make a comment. Councillor Birchfield.
Yeah, with recent changes to wetlands and SNAs where the councils are now possibly liable for compensation. This council locked up about 5,000 hectares in wetlands a few years ago. Now there is a potential there for the owners of that land that's been effectively taken from them to come to the council for compensation. So we need to have a think about that.
I would have thought that the legislation is likely to be framed that it's not retrospective. That's normal cabinet policy, but I guess we can only wait and see at the moment until we see what they deliver us.
Would have to be retrospective, because what they're trying to do is unlock the ground that It's already been locked up. They want to unlock it.
Hmm.
So anyway, we'll see. We won't argue too much here. I'm just flagging that 5,000 hectares of wetlands that possibly we could have claims for. Thank
I
you.
guess that's what the new risk that's been added about the impacts of the changes in government policy. I think it's 215 from memory in our risk register. May need to be broadened and be quite dynamic as we move forward and understand more what the government's intention is. At the moment, it's verbal announcements with a very light paper that goes with it, and saying that more detail in February. So watch the space, I suggest.
Yeah, exactly. Watch the space, but also bear in mind there's one plan. About half our freehold land has also been put under some sort of designation. SNAs, SASMs, outstanding natural landscapes, wetlands. About half of our 15% of the area has now got some sort of restriction on it. This will be very interesting to see how this pans out and how the compensation is going to be paid. Or the best case scenario is give the land back to the people.
Yes, I guess we're in supposition territory here. I might suggest
Mr. Chairman, go on. Look, these are matters for the Environmental Management Committee, the Risk and Audit Committee at this stage.
No, look, we should have a discussion on these things.
Second point I'd like to make, Councillor and Mr. Chairman, through you, is look, I want to be very factual about a couple of the matters that have just been raised, and this is fact, not supposition, this is fact. In terms of the identification of the wetlands across the West Coast, the Environment Court directed this council to do that. That's fact. Because the legislation that exists said that we had to, the council didn't. We got taken to court by appellants and we lost and had to do it. That's a fact. The second fact is that in terms of any compensation for identification of impediments on bank, etc. at the moment, that is only a first reading of a bill and is not the law at the moment. And until it becomes law, this council should watch that process, but that is not the law at the moment, and it has to go through a very strenuous select committee process before it even gets to its third reading. Thank you.
Yeah, and at this stage, that's why I put it in the supposition that we are jumping still at shadows. Let's keep a very close watch on it. We have raised a risk in our risk register, which will need to be monitored very closely over the coming months as it becomes clearer what is intended and where the waters are going to flow on this one.
Thank you, Graham. As is my right as an elected representative to bring these issues to the council.
Yeah, I'm quite happy that this does reflect into a risk 215, and we've got that, and we'll deal with that in the public excluded area of potential impacts.
Thank you.
Do I have someone that'll move to receive my verbal report? Thank you. Second. Thank you.
Yep.
There are no public reports for this meeting, given that we're so early in the triennium. That's not unusual for anyone that might be looking online. It's just the way the waters flow. And I can expect at the next meeting there will be more papers that we'll be looking at. This is for the motion to exclude the public. And the recommendation is that public be excluded for the following parts of proceedings. The meeting, namely for items 10 and 11. Do I have a move for that?
Yeah, I'll move.
Thank you. Moved by the chair, moved. Seconded. All those in favour? Aye. Against, if any? Carry. I'll just summarise that certain papers will be released. Thank you, everyone. We're back in public session. During public excluded, we looked at items to do with health and safety, and we have resolved that the base health and safety report will be released into public without the detailed attachments which are being withheld on the basis there is information in them, which is particularly in a small community could result in the identification of individuals and breaching their privacy. We also looked at the risk report there, and again, we're resolved to release the base report, but not the detailed risks under each of the headings, on the basis that this may expose information into the public which could be the detriment of the council. And with the quarterly whistleblower report that was received in from PwC, the entire report will be released into the public agenda. There was no other business considered within the public excluded, and on that basis, we now move to close the meeting, and the meeting closes at 1:10 p.m.
Online. Can I please call for apologies? No other apologies. Can I have a mover for that, please? Second it. In agreement? Yep. Everyone in agreement? Yep.
Right.
Item 3, declarations of interest. I have got 2 declarations of interest, and I will inform you as we go through the agenda. You got one on the Wanganui? Yep. Noted. Public forums and deputations, there are none. Late items, there are none. Through to the minutes. 18th November. It's recommended that the committee resolve and confirm the minutes. The Operations Committee meeting held on the 18th of November 25 are true and a correct record. Can I have a mover for those, please? Thanks, Chris. Thanks, Peter. Any amendments to those minutes?
I think in the public excluded, it said we knocked off at 11:07.
Bit late then. Okay, noted. Is everyone all in favour of those minutes? Okay. Actions list. 7.1. I'll get to talk to the actions list.
Right, going through on section 1 or 7.
Yep.
Coming back to or if we have Crown funding and the Crown funding over a period of time, tranches 1 through 3, they're at stick time, got bulk funded 60/40. I think Andy's wanting to ask whether about a longer pipeline of that period of time for rating districts that are smaller, they can't afford that funding. We're looking for a small value, 100 million over like 10 years. Now, at the moment, the Crown hasn't made that call on that. They want to pop the pipeline in, possibly look at that, but at the moment that's impossible. That we're carrying on with the tranche as it requires, and so we can't change that. I'm wanting to look at this in the pipeline, but that isn't at the moment. That isn't possible plan. So when they talk about the next tranche, which we hopefully either we try tranche 5 or we tranche the pipeline, you can ask them that the minister's willing to write on.
Action 2.
The orphan assets, I spoke about that last time.
Ongoing. Action 3.
If I'm talking ongoing, we'll give that one for later next month for the chief engineer.
And the Grade District Council.
Yes.
Action 4.
That's
complete. Yep. Action 5.
Matt, could I get you to answer action 5?
Grandfather.
His grandfather.
So, under the RMA, any land use activity can continue. So it's only new activities that require consent. So the changes to any of the plans do not affect existing
activities. So that's quite clearly narrowing. Looks like that round of 1 months. Yeah,
I think that.
Yeah. Some of the something to that.
Yep, that's fine.
Did anyone want to expand on what the grandfather right?
No, we're pretty up to speed there, are we? Action 6, that's complete. I can answer that. That meeting's been done and that's signed off. That's complete. Action 7. Completed. Yeah.
Are you satisfied with what we did there?
Yep, we'll just see what happens with the others if they clear it.
If they haven't.
That completes the action list. Can I recommend that the committee resolve to receive the report and receive the information noted? Let's have a mover for that. Move on. Second, Peter. All in favour?
Aye.
Chair's report. 26. Not sure really what's going to be happening in 26 in the council space, but watch this space, I suppose, for everyone. It's going to be interesting times. But I want to also wish the council and the staff a Merry Christmas and safe Christmas. That's the chair's report. Move it, please. Seconded. And all in favour?
All right.
Reports. Now we're going to move down to the Hokitika seawall. And who's going to speak to that? You're going to speak to that, aren't you?
Page is that?
Sorry?
Page.
Page 30. 30, Alan. Yes, sir. Righto. It's recommended that the committee resolve to receive the report. That's 1. Number 2, note the progress with responding to the abatement notice served on West Coast Regional Council by Western District Council dated 27th of August 25. Approve option 2, responding to the abatement notice being obtain consents existing temporary or unconsented seawall to remain in place until December 28, at which point it will be removed. Number 4, approve the budget of 107,000 to fund the option analyst risk assessment on consent application, noting the budget would be funded by the budget previously approved obtaining consent for the proposed seawall extension, which is no longer required for that purpose. Number 5, request staff write letters to the Western District Council and iwi, inviting them to enter discussions regarding the development of long-term strategy for managing the coastal erosion and inundation risks for Hokitika, with a view of agreeing roles, responsibilities and timeframes and costs for delivery strategy ahead of the next long-term plan round. Can I have a mover for that, please? Second. So moved Ashley, seconded Alan. You were going to talk to this.
Yes, thank you, Mr. Chairman, and thank you for accommodating this out of order. I'm here on behalf of Tom Hopkins to speak to the paper. It's a paper that follows from the paper committee received last month for the Hokitika temporary seawall consents, and in particular the abatement notice received by council from Western District Council in respect of that seawall requiring it be removed or that the necessary resource consents be obtained no later than 27th of February. And you recall that at that committee meeting, the committee endorsed 2 options for consideration. The first option 1 is removing the seawall, placing the rock at the northern end of the seawall or somewhere else that's already authorised by consents. And the second option, option 2, is to obtain consents for the seawall to remain in place until December 2028, at which point it would be removed. And the significance of December 2028 is that by then, both councils will have adopted their next long-term plans. There'll be some certainty about whether and when there would be a follow-up to the coastal erosion issue at Haukiti. So that option assessment is complete and is summarised in this report and in the attachment of the report, and recommends that the preferred option is to seek a short-term consent and retain temporary works until December 2028, or option 2. The paper sets out the 3 reasons for that, principally to do with benefit the wall provides, even though it's not properly constructed. Talks there about an anticipated erosion bite north, and this would not be a good timing to remove it, otherwise it exposes the properties behind it. And thirdly, December 2028 gives time to come up with a more strategic approach, or at least an understanding of whether there'll be a more strategic approach provided for in long-term plans. Dr. Ellis also comments on the need for an integrated strategy, and that is reflected in recommendation 5, Mr. Chair, that we just read out.
Yep.
I just want to note one matter to do with risk. Page 33 of the agenda, there's reference to the risk around not receiving consent by the date specified in the abatement notice, or option 2.
So that's for December 28, is it correct?
No, that's by February of next year.
Oh, yes.
Yeah. That risk seems more likely to be a reality. There is limited time between now and that date to complete the consent application preparation process and get it lodged and for a decision to be made. Some of those things are outside the control of this council, but best endeavours will be made to get it as sufficiently advanced as possible by that date. That may require an extension of the abatement notice.
Okay.
Yeah.
Okay. Yeah.
Questions?
Yeah. Peter?
Just one I want to clarify, please. The August 27th abatement notice from the Western District Council, what was the rationale for the abatement notice, given that it was put in for emergency work? It wasn't a wall as such, it was a stockpile location issue?
Yes. The emergency works provisions required a follow-up consent to authorise the emergency works. That needed to be lodged within 20 days. That did not happen.
Well, just be mindful of that for a future item coming up here. The only Prince Joseph. Thank you.
So no other questions? Oh, Andy?
Didn't the Haukiti rating scheme just pay for that rock? Long ago, didn't it? That was the rock we're talking about. Yes. So you'd think they sort of are responsible.
So we had a mover and a second. And no other questions? No further questions?
Can I just make a comment? Yeah, that the failure to obtain the consent within the statutory time period after invoking the Section 330 of the Resource Management Act predates all the staff here. I just want to say that. And it's a legacy matter that we're now having to deal to. Yeah. So I just don't want any reflection on all the current staff. Every single staff member that is now dealing with this is postdates this matter, right?
Alan?
Why don't you just leave the bank there, leave the rock there and save 100? Why do you really need a consent? I question, why are you going to have to go and get a consent? So I'll be voting against it. Just leave it there. It's doing a good job. This is the trouble. All the ratepayers' money gets burned up on these consultants and consents. So I'm going to vote against it in protest. Thank you.
Okay.
$107,000, put a bit of rock in there.
And through the chair, it would be silly to remove it. Well, that rock's doing a good job on the sea. That's why it was put here.
Kevin, I wonder if you could on the analysis of Mr. Ellis, please. It was a very eminent coastal engineer.
Yes, it's been an assessment of not only its effectiveness, but its design and method of construction, and it doesn't meet the standard that you would apply if you were building a seawall. And so it really is a temporary structure. It is providing some benefit, but it doesn't meet normal standards in terms of the way rock has been placed. Hence why it is regarded as a temporary structure and more time is needed to decide how to deal with the situation.
Can I ask a silly question? So does it need to actually be removed, that uplifted? Could it be configured on site or not? Like as soon as someone touches something, that's a cost. If it needs more rock introduced, that leave the existing rock there, is that practical?
That hasn't been assessed. The origin of this matter goes back to strategy which involved removing the existing temporary seawall unconsented and reusing that rock in a proper new constructed seawall. And that's been recosted at around $11 million, which caused some reflection on whether that was the right strategy.
Yeah.
Hence the change in tack agreed to by committee, which is rather than push on and build a substantive wall for which there is no budget, instead to think about the two options. One is remove it, the other is keep it there as is, and then buy some time for both councils to work together in terms of what a longer-term strategy, or do the council even want to do this? Do you want to develop a longer-term strategy for dealing with coastal erosion with risk of which a new seawall may be a part, including repurposing the seawall or repairing it or some other thing. But more time is needed to work through. Hence, this is a holding position to get through the next LTP development cycle.
I'd be in favour of the third option you just said then, but not remove. See if we can buy more time to get a good strategy between both councils.
So that's option two, effectively. Option two is leave it there at the minute. There is some maintenance work that's needed. Dr. Ellis has made some recommendations on some things that need to be done, even in its current state, to address it. Those will be handled by way of operations and maintenance type activity. So option two is leave it there for the moment, apply for and hopefully obtain consent. Ideally do that by the end of February, although as I said, it seems unlikely that consent will be granted by that date, but nonetheless, get it consented, so therefore it becomes lawful. And then there is some discussion through LTPs and that recommendation 5 with other stakeholders on whether there should be a strategy for dealing with coastal erosion threat and how that might be incorporated into long-term plans.
I'd be keen on option two. So, Peter?
Just to give a bit more picture on why it was put there. It was put there with the approval and request of the then Westland District Council, because the sea was effectively knocking at the lead-head nails on the fences of the back sections of Wise properties.
Yep.
We did. We put it in place. It was never put in as a seawall, as an emergency measure to stop the ingress of the sea that was going through a cycle at that time. It arrested that cycle. It's had its ups and downs, but effectively it's done the job that it was designed to do by lunchtime the next day. We got straight onto it, as opposed to Andy's issue down at Whanganui, where in time we worked, we done it as required. Now it's held up pretty good since then. It's been a number of years now. I'm just a bit curious that as soon as we talk about removing it, man is not the biggest project since the Springbok tour, I'd say.
I agree. If it's there, I can't see why we remove it.
Through the chair, I actually support option 4 because we don't have a prudent amount of information in front of us at the moment to make any reasonable decision unless we receive advice as to a proper analysis proper analysis and risk assessment along with the consent application. And obviously that option 4 then leads to a longer term outcome for that seawall extension. Whereas option 2, this council is saying December 2028, it's removed.
Yeah, no.
And if that happens, we know how the community of Otago are going to feel about that. So I think before we can make any prudent decision, we need to have that analysis done and the risk assessment. And I note that that 107,000 was already approved for obtaining consent for the proposed standard. So I think it's prudent as councillors we go ahead and get that analysis and risk assessment done as part of a consent application, looking to a longer term outcome of that city walk.
There's a lot of history behind it, isn't there?
Through the chair, I thought this one of Mark Ellis's was an analysis of it. It's not just been produced, and he suggested several remedies and actions to take. Isn't that what we're?
Yes. So Dr. Ellis's report, which is an attachment to your report, is effectively that risk assessment. It's got two options.
So
we leave it there.
With the 107.
Or remove it. And in Dr. Ellis's opinion, there is risk in removing it. Accepting it's not built to the way you would ordinarily build it in normal circumstances. Nonetheless, it's providing some benefit and it's a timing issue. State of the beach, because it's substantially buried in many parts. It would be very disruptive to dig it out right now. So that's why there's only two options. The two options approved by committee last month, which are being considered. One was removal, because that's what the abatement notice says, and it's got some issues. The second option, based on the risk assessment, is leave it there and buy time through an LTP process to step back and for stakeholders to discuss a more strategic approach to coastal erosion for Hokitika, which is the recommendation 5 in your report.
Do that on a planned basis rather than just at the moment. If we just go with option 2 and immediately whip it out, there's all sorts of implications and things you could trigger off. Whereas option number 2 is going to be done by 2028, so that means it's going to do it gradually and planned basis, and that's really what, isn't that what?
Yes, Dr. Ellis is saying. Dr. Ellis is saying the third reason for leaving it there is December 2028 gives enough time to see this erosion thing moves through. A much more planned approach, because the immediate priority of the council is to get lawful abatement notice by February. So these are the two actions that get it lawful, removal, or get consent, buy a bit more time, and then start to work out how to deal with it. Now, of course, if council decides or committee decides on option 2, once it gets consent, you could then decide, well, post December 2028, we might decide that it's going to be there for a bit longer and there might be further consents or whatever. But what we're trying to do here is provide some sufficient surety in the short term. If you go for a really long consent for this temporary seawall, it might be quite hard to get consent because it is intended to only be temporary, which is why it's got a relatively short term being sought.
But as part of that process, don't we need some options analysis from technical experts, from people who know what they're doing?
So we've got that in the form of Dr. Ellis's report here. Yep.
But in that, we're actually saying,
the whole options back there.
Right.
Dr. Ellis is commenting on the risks to council and the community of option 1, which would be removing it.
There's 2 parts to it, isn't there?
Yeah.
Wanting to be legal and one to actually practically do what it is. Do it so you're not going to erode back to these properties. And that his suggestions that he's telling about how you put move the wall and put the pipes through the walls there and plantings and things like that. Those are all these little wee suggestions at the very end. Isn't that what it?
That's correct. There are some things that Dr. Ellis is advising if council decides to go with option 2 and keep it there are some things that do need to be done to make it safe.
Option 2 plus that.
Yes.
It's a bit confusing, isn't it, mate?
Yeah.
It is
very confusing.
Yeah.
So from my perspective, would we ask for a show of hands to keep the seawall at its state? Is that right? Which would refer basically to option 4 here, wouldn't it?
Got 2 options only in the covering.
Okay,
Option 2 is leave it to December 2028.
just, yeah. Option 4.
And option 4 is
Oh, yeah.
Through the chair, the worry for me with number 2 is it's got to be pulled out in December 2028. Well, what's that? It's in the middle of doing a bloody good job.
Another extension like the sewage funds.
Yeah.
I've had 4 already.
So why do we got to put a timeline on it out?
So that would then bring it to option 4, wouldn't it?
Sorry, I can't find option 4 in my.
Oh, sorry.
We got two options.
Two options, yeah.
Because we can't ignore the abatement notice. We've got to deal with
No.
The immediate priority is the abatement notice. By February, it's got to be removed, i.e. option 1, or option 2, get consents to get it lawful. That's the immediate priority for the council. If the wall stays, option 2, buying time then to just step back with the stakeholders, recommendation 5 of the report, to think about whether there's an appetite in the next 10 years LTP cycle to work together on a strategy for dealing with Hokotika's coastal erosion, of which a seawall might be part. You've also got options. You could make decisions in the future to get consents that extend the temporary consented seawall beyond December 2028, or reconfigure it in some way, make it more robust. There are some technical options there, but there isn't time to work through all of those possibilities between now and February, which is why the focus is get lawful.
And we need funding for that consenting process, don't we? Correct.
Mr. Chairman, I wonder if I could suggest a way forward here. Putting aside the current recommendations, I wonder if this is the way forward. The first one is to be logic and gain consent by February of next year for the lawful making the structure for the rock pile on the beach lawful until December 28. That's the first one. The second matter would be to before December 28, but with the cooperation and joint approach between this council and Westland District Council, and we don't know if they're willing to join with us on that yet, but presuming that they are, that before December 28, come back to this table and Westland District Council and by the joint committee with future management options for this matter. And everything else would be on the table for that.
Is that not the gist of what's on the table currently? Well, no one wants it gone tomorrow. What I think we're saying is we're not going to pull it out by December 28.
No.
We get unanimous support for that if we remove that.
Yeah.
Date, which is causing the confusion around the table. No one wants it gone tomorrow. No one wants it gone in 3 years.
Yeah, it is confusing the way it's.
That's the timestamp there is the issue.
Not right.
Because there was a proposal to extend that seawall, wasn't there? But
So, sorry, Andy.
I think there was a proposal to extend it.
Yeah, so could I,
seawall.
So just for your clarification, what you've just said, Daryl, is that what we would approve option 2? Is that correct? It's not really, it's more option 2 and.
I think it's slightly altered.
Yeah.
Option 2.
Yes.
Could I just ask, Ashley, why do they want it pulled out?
I don't think anybody wants it pulled out.
What's that?
I don't think anybody wants it pulled out.
What? Why have they? Well, that's the abatement notice, isn't it? They want it pulled out.
No, they want it consented.
Consented.
Or remove it. So it's removed.
Yeah.
So did you get what Daryl's down as far as that goes? So it's almost a version of number 3 here, hybrid number 3, and part of number 5.
What I'm trying to do is remove any reference to removing the rock pile.
But also not put a time frame.
Until we come back to this table with a range of options. But we do have to put a time frame on there, and I do agree by December 28, those options should be back here.
Well, I think that we can't really make a decision on what we've got there, have we?
Well, then we have the options and not the removal.
So we could amend recommendation 3 to say approve option 2 for responding to the abatement notice being to obtain consent for the existing temporary and under consented seawall to remain in place until December 2028, by which point
But we need to put that date around it.
that would be the termination of the consent to the temporary seawall.
Significance of the date. We've got
Yeah.
we've got to fight for a
All right, so
consent.
therefore, that would give a holding pattern for us for the date. Okay, I recommend that. Can I have a mover for that, to leave it?
Just read it out again, so we're.
Okay, so open to some suggestions for wording here, but approve option 2 for responding to the abatement notice, being to obtain consents for the existing temporary and unconsented seawall to remain in place until December 2028, by which point to have a plan for further actions, or something along those lines.
I think the plan needs to come to the next office meeting and basically leave it as it is.
To nail down this December 28th date, which is causing the issues, can we add in line with the consent? Which, if we're applying for consent for 3 years now, this is where the confusion's been around the table the whole time.
Yeah.
Add what you said, Muriel, and then some sort of qualifier around in line with the consent being applied for.
Put in line with the consent conditions.
Yeah.
Yep.
The consent conditions will also.
So we can move that today, can't we, to come to the next office meeting? Yeah. So can I have a mover for that, please?
Just, hang on, Mark.
Ashley, sorry.
Just the scary thing is the removal of that on the 28th.
We're not going to bring it to the next ops meeting to make a formal decision. Get a consent.
The consent conditions will allow for the consent to be extended if that's where you end up landing.
Another one, you cannot extend, you cannot vary a consent to extend its term, which is why the term is really, really important, because what we need to do is go away from today with very clear direction around what term are we seeking for this consent. If you go for option 2, what term are you seeking? We've recommended a 3-year term because we're trying to balance a bit of certainty, a few years to get things sorted, with it also being short enough that we're not having to put in a very, very comprehensive effects assessment covering the next 35 years. And that would require a whole lot of analysis that you just don't have.
Yeah.
So I think what I'm hearing is it's the at which point it would be removed, which is committing to an action which you're not in support of. If it's silent on that and just stops it at December 2028, because you're going to make some decisions between now and then as to what to do afterwards.
Yeah.
Removal could be one of the things, a bunch of other things you'll think about. That's the bit that's problematic at the minute. I can see that we could drop that.
It's very confusing wording, I must say. Yeah.
So if we remove, at which point it will be removed and replace that with in line with consent conditions.
Yep.
When you put the motion, Mr. Chairman, could you quote all 3 options, please? For, against, and abstaining. When you put the motion.
Yeah. So we had a mover from Alan, seconded from Ashley. All in favour? Aye. Anyone against? No.
Abstentions?
Abstentions? Yep. Stevie.
I was just wondering, do we, as this recommendation, need to assign a budget for this week? For this proven budget of 107. What we need to do to ensure option 2 is carried out, and we're working through options for beyond the end of the consent. Do we need to assign a budget now to that? Because that's what 4 is saying. It's not.
I'm saying it's not.
You have to put the motion again, Mr. Chairman. That's proposed.
Option recommendation.
Not very clear.
Well, recommendation for the budget of 107,000 doesn't include any options assessment for December 2028. What that looks like. It only provides for the discussions among stakeholders around the matters in recommendation 5, but that doesn't have a budget there for any kind of go away and come up with management options or whatever.
No.
That's a further cost.
Which is necessary.
Which is necessary.
So 2 and 3 will still have that provision of number 4 of the recommendations. Can I just ask a question? There was a proposal to do that, extend that seawall further up, wasn't it? And then we They got sack burner because we did the river.
That's that. Okay, look, I want to comment here, but look, we really do need to pin down this recommendation and things, but to answer that question, Mr. Campbell, the original plan was to extend, yes. The consenting and design came out of PGF money, and then the remainder of the money was moved up to the Riverworks. Under the Regional Infrastructure Fund. Regional Infrastructure Fund is the new fund, is not open and available to coastal protection works. So if we do anything here, the full cost has to be borne by the community. The next piece of information is that a rough order cost and an updated cost was obtained that said to extend and do everything we need to here was north of $11 million, right? And that is probably too big for a community rating without any form of subsidy. Now, we didn't go out and consult on that, but that was the feeling of the joint committee. So also seawalls are much more expensive than river protection. And the design engineers will not sign off for long design periods because of the vagueness of the coast. Okay, so they might only sign off for a 10-year design life, right? So right around New Zealand, seawalls are a difficult, contentious thing. But as you know, we have properties on the coast that are vulnerable.
So we've approved option 2. There's no budget for it.
I think we're okay if we go for options 1 to 5.
Yeah.
That really does it.
Does.
Whole lot. At the very end, it does timelines and costs and delivery of strategy.
Yeah.
Get the next time.
And we can't crystal ball cost of where it's going to land.
Yeah. And then approve the cost in, at the moment, we're just saying.
So if you read from 1 to 5, like we did, I think
we've got it covered.
if you approve every one of them,
Yep.
and obviously we don't want any removal.
To the chair, can I just clarify? We've got recommendations 1 to 5.
Yeah.
We've got options 1 to 2.
I get that.
So
But on what we're looking at approving,
yeah,
it's 1 to 5. It's 2 recommendations.
so you're choosing a third recommendation plus.
No.
Sorry,
No. If you read in your recommendations,
got that.
Move an amendment that we recommended the council resolve options 1 to 5.
yeah, 1 to 5.
Recommendations 1 to 5.
Yeah, there's terminology issues going on here. We're talking options and recommendations.
Recommendations. Yep, recommendations.
Yeah. We're using different language for different things, and that's causing confusion again.
Recommendations.
There's 2 options. Yeah.
So approving recommendations 1 to 5 with the amendment to recommendation 3 to remove, at which point it will be removed. Place that with in line with consent.
Happy to move that for a third time. The change. Yep.
Okay.
Yep. Move that again.
Move that.
Move that. Seconder. Yep. All in favour?
Aye.
Aye. Any abstentions? Peter.
Same.
Right, no.
Okay.
We'll go back to.
He's just had to leave.
Oh,
She will be back. We go. 9:40.
okay. Righto, so we're going on to 9.2 now. It's an update from the West Coast Management Committee. So that will be you, Joe.
Yes.
This one. This one.
Okay. Kia ora koutou, everyone. So I will
to take you through this brief update. Just by way of introduction, this is a quarterly report back to this council. So this follows on from the emergency management joint committees that we have every quarter. So the intention is to provide you an overview as an update on the content and discussion that we had at the joint committee. Our last joint committee was back on the 20th of November. So I'll just take you through a few highlights of this report. The recommendation is to receive the report. So just at the outset, just want to acknowledge and appreciate the time that we've had across all four councils around an orientation program that we have been rolling out. That's been a good opportunity for us to introduce the team across all four councils, and also to focus on some critical areas such as the situations when we are considering need to make a declaration. Really appreciate the participation that we've had across the councils. At our last joint committee meeting, there was the approval to appoint Mia Lash as our new joint committee chair. So that happened, and that is for a term of 3 years. We also briefly touched upon the most recent activations that we've had affecting the region. So we had quite a busy October, weather events that affected all of the region. We had activated our emergency operations centres across both Westland, Grey and the Buller districts. And so really appreciate the time and support that we had, not only from councils, staff from across all of those four councils, but also volunteers, our coordinators across our communities, and also our partner agencies. It was a very busy October for us, as it was for other parts of the country as well, that was severely affected, including parts of Canterbury, Otago and Southland. Just in terms of some updates, so I just wanted to note again and have the opportunity to introduce you to Zoe Double and Jamie Klein earlier today as two newbies within our team, which is great. At our last coordinating executive group meeting, we talked about prospective application topics for the NEMA Resilience Application Fund, which is put out every year. So those applications are due by the end of January, so not too far away. So the four sort of topics that we were talking about are there in the report. I won't go into them in too much detail, other to say that we will be working up applications to put through the coordinating executive group to approve in January in time to get those through to NEMA before the end of the month, the end of January. The two main highlights of this report include the new regional group plan. So that is the plan that will replace our current plan, which is 2016. So this is a culmination of a large amount of work after the last year and a half. We've had numerous workshops across other partner agencies in order to put this new plan together. I'm really pleased with how it currently looks. The timeframes around this plan is it's required to go out to public consultation. We are looking to do that on the 12th of January, and it needs to be out in the public for at least a month. After that, if there are any alterations, those will be heard or deliberated at the next joint committee meeting, and then the penultimate version will go up to the minister for his consideration, and then hopefully we'll go into plan. It will be adopted at the next meeting, which will be in May 2026. So I think you've got a hard copy of that, and there's also a version of that attached to the meeting papers. What I want to do with that as well is have a session with each of the councils over January as an opportunity to talk in more detail about the content of that plan. It is a plan that really sets us up in terms of what our commitments are across our communities, but also how we collaborate with our partner agencies. So it is a core piece of work for us. Capability and training, I won't touch too much on that, other than we are working on a training program for 2026. And the last topic in the report is around resilient Westport. So at our last joint committee meeting in November, the Westport evacuation plan was endorsed. Again, that's the culmination of a large amount of work over a couple of years around putting together the evacuation plan. So that's another milestone achievement. There are a couple of other pieces of work that relate to Resilient Westport. One of those being around the coaching and mentoring programs that have been delivered around business continuity. And so that has been well received by a number of businesses around the Westport area. And the recommendation to receive the report. Thank you, Chair.
Thank you very much, Claire. That's a good report. The recommendations, any questions from Claire?
Yeah, I'd just like to say, through the chair, to thank Claire and the team for the induction program. It sounded very, very helpful. I didn't realise as a member of the public coming in that civil defence was so complex and so well developed, as I found out through the induction program. So really appreciate it, Claire, and what you and the team did. It's very informative.
That's through the chair. I think the evacuation plan is really great. I've just got one little thing I'm a wee bit uncomfortable with is Murchison being an evacuation area, because in any sort of an emergency, whether it's or the two major ones that I can think of, either earthquake or flooding, we just don't get enough time to think that we evacuate the Murchison, because we've got two gorges, the lower gorge and the upper gorge to go through, and if there's a flood imminent, then it'll actually be putting people more in danger by trying to get them to go all the way to Murchison, and it'll only take, I think you said, about 90 odd people anyway. That's it's not with that risk. I reckon Murchison. The other reason I'm uncomfortable with Murchison, it's not in our region. It's in Tasman. So we'd have to some sort of an MOU with them. But just the worry is that any floods I've had anything to do with, by the time we get to the stage of saying yes, we've got to evacuate, so well advanced, the lower gorge is virtually get through the lower gorge, let alone the upper gorge. So my worry is Murchison is probably not a suitable evacuation point. And one other little thing, just civil defence has mnemonics all over the place, NEMA and CDEMS and all sorts of things. D4H. It took me ages to try and figure out what it is. This is D4H on several parts of the plan is mentioned, and I couldn't figure out what it was. I thought, well, maybe it might be in the little list of
acronyms
codes at the end, but it wasn't. And I finally found it, and I think it's an online plan that you can actually look up, and it's sort of like a web page that tells you what to do. D4H is
it needs to be. It needs to be defined in the plans. I
think so. Yeah, either have a link or something like that, because D4H, and it's mentioned quite regularly through it. It's quite an important thing for people to have a little look and see what's D4H means. So there's nothing to 100% of people, but
And saying it, I'm not criticising it. I think it's a fantastic plan. We've wanted one of these for years, and this is just fabulous. But it's just a couple of weeks misgivings I've got that are just those two. I think it's a great plan.
Any more questions?
It's gonna be real viable.
I'll move the report.
Move the report. I have a second.
Second it.
All in favour?
Aye.
Thank you very much. And now we'll move on to item 10. Oh shit, what's that? Oh, there you go. Attachment report. 36. Yeah, back. Bloody hell. Michael, you're gonna think of this.
One.
Monthly attachment report. Yep.
42. 42 of the PD.
36. Oh, yeah. Go ahead. You want to speak to this report?
So the last month has been only a small amount of physical weeks that we've taken place. Staff have been quite busy with various different meetings and those. But I'll get quite a bit undertaking is on the email. Some work down at the holding shopping here.
That's the end.
Good.
Is that the end of Sid's Road there, is it? Yeah. So I can. Yeah.
There's a washout there which is been repaired. Wellington district between but in that number of small events, not quite annual events, but quite repeated over the last 2 months, which has caused something of a lot with that. Probably under repair one area to the end of Wellington that road. And the process of doing the repair, we realised that a lot of the tow rock has disappeared and the more rock is stumped down, which raised the concern to section stop bank about a kilometre along the river is actually quite hard against it. We organised a meeting with the state person and just with delays the thing. This here, the very insufficient block to provide the protection it would like. The budget for the scheme is quite tight. What would you like us to do about it? It's really making sure they're very much aware of the situation. And then everybody just this stage just to repair the hotspots. But it's quite indicative of quite a few places on the scheme where tow locks are washed out, locks under the stump, and there was actually quite a bit of maintenance work to be done there.
Because we did speak about that earlier.
Yeah.
About the new connection.
Yes.
So through the chair, so Wayne, is this a scheme, you had your rating, your condition rating 1 to 5. Is this one that's likely to be in the 4 to 5 zone, is it?
I think I've rated this back at the moment.
Right.
It's got several what we call hotspots along it. It's quite significant slumping.
Which is quite significant to its integrity.
No, I think we're not going to run here. All these completely done all the slumping. We start getting some large events over summer. So I think it really tests the integrity structure.
And the rating district are aware of this.
We much so. It's why organised the meeting, and I think our
our AGM for that scheme is scheduled for early to mid-February. So I'm on the process now of organising a committee meeting, it's just to raise awareness for more, what potential costs are, and discuss where a party should be.
And what the risks are.
So, through the chair, if I can expand on this, this is about the condition rating. What I want to labour this point is that we're talking about the condition ratings. We've got the condition rating for all our assets. There are about 180 of 4s and 5s. We're just checking those again. Then going out, we would be saying these all need maintaining, and they need maintaining some urgency. We don't have enough money. I don't know the avenue there, but we've got to highlight to the community that this is happening. We're talking about the rating districts that we've gone to, that we've highlighted this is coming back. I think people are not believing 4s and 5s. That's why we need to check it. Once we've checked, we'll go around with each individual scheme and say this is what we're recommending. If they don't, then I think we have to come back as a council and say what's our opinion about refusing to do maintenance.
Any other questions for Wayne or one? Recommendation is to committees receive the report, receive the report. Can I have a mover, please?
Moved.
Second, Andy. All in favour?
Aye.
Wayne. I'll get Scott, I guess, to talk to the front. Good afternoon, Scott. This is item 10.1. Franz Joseph, Stage 1, Operations, meeting 25. November 25, Operations Committee Project Status, Franz Joseph, Stage 1. Can I get you to talk to that, please, Scott?
Before that, people want to know why Tom's not here. Everyone understands what's happened to Tom.
He's supposed to break his collarbone.
Yeah, it's more than a little bit damaged. His piece is missing out of his. I think there are 3 pieces of bone missing. He's not very happy and he's at home, so he's off till the 26th. But he thinks he'll probably have to go to Christchurch to have it repaired. So that's why he's not here. He's not feeling very happy.
So we're all sort of filling in for Tom.
The training was.
Cool. Good afternoon, everyone.
Can you hear us all right, Scott?
Yeah, can you hear me okay?
Yep, good as gold, mate.
Cool.
Be careful.
Cool.
I'll get you to talk to that report, Scott.
Yeah, no problems. Since we last reported, the key parts of this is that we've had some reductions in cost from the contractor with regards to the stormwater. We're still planning to do that work, and it's likely to be obviously in the new year, when it's obviously a little bit drier. So that's the last bit of the physical works to be completed there, and then once that's done, we can finalise the last parts of the project. But generally, we're in a good spot in terms of budget and the project as a whole for Stage 1.
Excellent. Any questions for Scott?
Scott, what sort of quantum has that price reduced?
It's in the order of about 10%. So we were it was under the 100K mark where we were originally pitching it.
On paper, actually.
Scott.
Any other questions?
Page?
42, Alan. Current budget, current. Okay, any other questions from Scott? Recommendation that the committee to resolve and receive the report. Can I have a mover, please? Seconded, Alan. All in favour?
Aye.
Thanks, Scott. Be back now. Hey, good, Scott. Okay, Scott's you again. That's Franz Joseph, Stage 2.
Yes.
Page 51.
Yeah, cool. So I'll just give a high-level summary. Key parts of the project is around the Milton and others. The recommendation for the contractor for that part for MBD. There is a pre-start meeting on site tomorrow with WSP, the contractor, and the Innovo PM. So that is aligning that to mobilise for the construction work in the new year. That is just the repair work and strengthening to the Milton and Others Bank. That doesn't include any extension or any uplift in height at this point. The other part I can refer to is that we had a meeting with the Rating District Working Group last Wednesday, and we had a number of good discussions there. They are pleased with the level of contact and information that they've been receiving, and it's working well since we've established that group. So all is in train with that. A couple of other areas that were discussed were around the uplift of the parts of the rubbish dump bank, some additional spurs, etc., and they were discussed with Ben Pascoe, but they're likely to come up in any further in a further joint committee meeting, whether there's to be any recommendations out of that. So there's some work to do on that front.
Thanks, Scott. Have you come up for a name for others yet or not?
I think there's been some information bantered around. I heard Willows Bank at one point. So, yeah, I don't think anything was finalised, but anything that was going to be put forward was going to go to the joint committee meeting.
Scott, any questions from Scott?
I have one, probably not to Scott, maybe to the Chief Executive. It's relating to the Haverwall and that. When the Haverwall was put in, there was a comment in the media from people concerned in council that the Haverwall was putting the community at risk because it wasn't properly engineered. Okay, on my reference in that comment, that's verbatim comment, is to the wall that was put in front of the sewage ponds. That too was not engineered, and advice was ignored. So the question I had relates to the flood wall on the seawall one. It wasn't a abatement notice served on the Western District Council with that wall to get it lawful, because it's coming up 2 years in February when it was put up as emergency works. So I don't believe there's been a consent granted in 20 days. We're certainly well over 600 days coming up. And I've asked a number of times, where's the consent for the emergency work? We can't action one at Pope Ticker if we don't action this one to get it lawful going forward. Because if we're going to have an extension to the Haverwall, we've got to tidy up the rats and the mice that could let a claim down, so to speak, if there's an insurance claim on it. Because if it wasn't engineered properly, say goodbye to your claim.
So if I understand properly, you're talking about the Western District Council kicker wall at the bottom of Havels that's been constructed. Okay, so look, if I could just explain to all councillors. So Western District Council, under Section 330 of Emergency Works of the RMA, erected a minor bank at the bottom of Havels to protect the observation ponds. They did not, within 20 working days, and still have not lodged a consent for that structure. So yes, the circumstance we find ourselves in is the Westland District Council have served an abatement notice on us for a similar situation with the seawall. And yes, you're correct. We haven't done the same on this matter down at Franz Joseph. The negotiations have been ongoing, because what I've put to them is that if the Havels wall extension is agreed to and is constructed, there is possibility of picking that rock up, which is unconsented, and using that as part of the Havels wall extension. And the chair and I spent 2 hours with Westland District Council Mayor and Chief Executive discussing exactly this matter on Friday. I am hoping, as I think the chair is, but I'll let the chair comment too, that there may be some resolution from Western District Council on the extension of that wall. And if that is the case, and the material is suitable, that issue will go away. If that's not forthcoming, Councillor, you're exactly right. There will need to be some RMA enforcement consideration of that situation, and it's fun.
With due respect, to make it lawful, regardless of what happens, use it like a pickup stockpile, like the one of Hokitika, same purpose. It needs to be lawful.
Mm.
The end of story. It doesn't matter if they don't need it, they do need it. Doesn't matter what happens to the end result. So if they're insisting on us doing it, well, come on. We can back and forth and argue the finer details, but that's the situation, isn't it?
Yep. Sorry, Alan. Question?
See the Havel wall extension still on the agenda. Daryl, are you still pushing this? Because it was pretty clear at the meeting before the election that the people down there weren't interested in the $3 million cost of it. So what's going on?
You're 100% right, but I'll just put the caveat, they were not interested in pursuing that Havel's wall extension if they had to pay for it as a rating district.
Yeah. So who's going to pay for it?
That's under negotiation at the moment.
Yeah. And just to add to the CEO's advice, we have been working very closely with the council and making it very clear how urgent the situation is. So it's certainly not through lack of trying.
Through the threat to the off-station bonds.
Just want to acknowledge, sorry, I should have mentioned that Councillor Caston was in the same meeting with
Yes.
everyone as well.
Yes.
So thank you for support of that.
So what you're saying is it will be fully funded by the government or the taxpayer?
No, I'm saying that there is no intention to have it funded by the rating district.
Well, who's going to fund it?
Well, the other option is obviously it's funded by a general rate. It's
general rate.
Yeah,
of Westland.
Of Westland.
Well, you'd have to get the Westland District Council to agree to that.
Well, that's right. That's right. And what we're trying to do is we're working with the Westland Council to try and find a resolution to the issue so this issue can be resolved. Yeah. And we've been quite a bit of effort doing so.
$3 million again 3 years.
Because through the chair, they reckon no emulsion's coming up quicker than what they expected, don't they?
No, they don't reckon.
Yeah,
no, science says no.
So is it, that's a lot of money to spend for a couple of years.
It's Westland District Council's decision, not ours.
Mm-hmm.
If they want to do it, they will pass the motions at their table and do it. If they don't want to do it, they won't do it. That's right.
What we need is a decision.
Because we hold the money from the government in terms of the 60%. And if they don't want to do it, we'll get the money back.
Yeah.
Good.
Understood.
That's 100% their decision, isn't it?
I personally think it's a waste of money.
It's $100,000 a year, isn't it? No, million.
$3 million.
Million. 3 years, Jerry.
I'll move the report, Mr. Chairman.
Yep. Second it? Yep. All in favour?
Aye.
Thank you. 10.3. Hokitika River Walls. Scott.
Thank you, Mr. Chairman. The key actions over the last reporting period is around progressing with the design for the riprap repair. Some additional survey work has been requested around understanding the depth of the channel against the bank, in particular the lower section. So we're talking the section from the boat ramp down towards Sunset Point. So we're working through the methodology around how that would be constructed, particularly based on the depth of that particular channel. So we've now got that information, and DO are preparing that methodology and repair. The other part to note is that we've got some stakeholder consultation meetings scheduled. We're meeting with Heritage NZ and WDC tomorrow. That's just a kick-off, just more around the process and timing of those works, and also noting that we're still to finalise the contracts with Kānoa in terms of that tranche 2 funding, but things are moving along in parallel as we progress this.
Excellent. Any questions of Scott? Take rules. Okay. It's recommended that committee to resolve and receive the report. Can I put a move for that? Thank you. Ashley, seconded. Everyone, all in favour?
Yeah.
Thanks, Scott. Greymouth Operations Project.
Yep, I can talk to that.
And that's on page 81.
So yes, I can talk to that. Thank you, Mr. Chair. So we met on site a couple of weeks ago with John Bell, the engineer, particularly looking at the replacement of the stop logs. This is part of the tranche 2 work. We met with Paulette as well from an operational perspective. This was around putting together an optioneering report in terms of what are the options there in order to make those stop logs less labour intensive, but also noting that we need to work in there with Kiwi Rail and others around what does that look like. So John Bell has been assigned with preparing that options report. And hopefully we have that in the new year to be able to present around the options for that particular part of the work. With regards to the 2, 4 and 5, we've been working with the committees around making a recommendation for MBD for those works, noting that there's a couple of items within the schedule that need to be updated, and also the requirement for closing out the last parts of the tranche 2 contract documentation, which we've been working with Kānoa on to close out. So that's sort of been the process there. With regards to stage 1, Western Mineral Sands, I do need to, I hadn't caught up with Tom prior to him having his injury, but I do need to catch up at where things progressed with GDC and WMS in terms of their lease negotiation. So that is something that does need to be closed out. I'm aware of the council's position on this in this room, but yeah, it's something that I need to find out who I need to talk to in order to progress that.
Thanks, Scott. Any questions of Scott? Yes, Peter.
Yeah, just on that last point, you know, the concern was raised when Western Mineral Sands asked us to alter the work we were doing, and it was only going to take, you know, a few weeks, a few months. Well, we're running into a year come March, and we're going to have a season shortly where there'll be no one anywhere for several weeks, Christmas, New Year period.
It's unfortunate Tom's not here, but Scott John's it. We're aware of that. Noted what you're saying. Any other questions from Scott? Okay. Recommendation is the committee to resolve and receive the report. Can I please have a mover? Alan, second to Chris. All in favour? Okay, I see Penny's back online. So, pardon? That's right. So, yes, so I was going to pass over to pardon?
Or shall we?
Yep.
Should we do finish 10.5?
Okay.
Which page?
So we're on page 4. I know we're on 92. And can I pass over to Chair Smith to the 10.5? Yes, you're here. Okay.
So Jenny and Chase are online. Chantal.
Yep, so that'd be Peter in.
Peter, Penny, and Chantal.
Yeah. Just by the risk, could we go to Peter Blackwood just to papers? Yeah.
Okay.
Yeah.
Peter?
Yeah, definitely. I'm all prepared for this. This is from the Westport office of the Regional Council. I'm not going to go through the whole report, but there are some salient master points. I'll talk about the Upper Buller River. We've noted there that the current assessment has identified there's likely a significant seepage problem at 2 locations. One location is upstream of the O'Connor's home, does not affect the O'Connor's home area. It's all on one farm. And I've always said that we need very careful check at this location because it's the site of a relic overflow channel from the Buller, probably a past major channel of the Buller. And that is where the stop bank reaches its highest point throughout the scheme of about 3.6 metres. The other location is adjacent to what's called the domain, which is immediately upstream of the State Highway 67 bridge. So we're assessing that in detail at present. I do not want to talk about the options for the farm one here. We'll need to talk to the farmer, but there are some evident solutions there. We want to quantify how much seepage there would be, because if you have seepage, then you also have to pump. So we've asked GHD to go back as a variation to their contract to assess the seepage that would get under the current climate. Under the current climate, floodwater levels would be maybe 0.6 or 0.7 of a metre lower. And so we're expecting a different result then. And it may be expedient to build in more resource in 3 or 4 decades away, but do what we need to do now to secure the town. This is an important area to shut out overflows from the town. The one by the domain is quite a lot simpler. It probably would mean that we would bund around the domain, and we've already discussed that with Buller District Council, and they're very supportive of that idea because they already have some stormwater from the main coming into streets nearby. So we always knew this would be an issue there. Budgets were made for this. Whether they're enough, we will find out, but we do have solutions. We met face to face with GHD, our consultants on this in Westport yesterday, and we'll continue to meet. So that's the Upper Buller. Note that we've got approval for the Orowaiti, the eastern section there, but I want to go over to the Harneys Road to McKenna's to deliver some Christmas tidings of good news. We've had within the last 2 days, the planning report on whether we need a consent for this, and we don't. Even though the TTPP has got new rules, we meet the rules of the TTPP as well. So Jordan Mandry will be busily getting this finally designed and put it out to tender. So I would hope within this financial year that bit from Harneys to McKenna's will be built. Lower Orowaiti, you are making good progress on that. And we might accelerate the AEE. We already have an AEE on the upstream section. Avery's, we're still trying to get our consent. We're waiting for one government body to sign off on this. Tangata Whenua have been very forthright and helpful in this. They've signed. We're waiting for one government body, and we've been going out talking to landowners. I think we're only one away at present. So we are making progress, but it is disappointing on the response from this government body. Okay, downstream of the bridge. I didn't say this, but we had a meeting with Westland Mineral Sands this morning. Obviously, from the Buller Bridge down to Tallies, the lower part of that is very important to them for their operations. So we will be meeting with them every 3 months. We've organised the next meeting, and the intent is to start construction there around July 2026. So we're at least a year away. No, July 2027, sorry. So we're a year away from that. Complex area, but there are solutions in our meetings with the Westland Mineral Sands. It's not the first one. We've had a couple. They've been very positive. I must say this scheme has some challenging things to do. The floating lagoon, yeah, I talk about we've received our 2 archaeology reports, and I'll talk about, we've had one for the Lower Buller where I've just talked about where we are, and one for Carter's. I'll come to that shortly. Tallies Bund, WSP's report on their options is due, and I understand it's very close. Carter's Beach, we met with the representatives of the Tangata Whenua, Susan Aiken and Pip Lynch. Had a very good meeting on site. They are representatives of the Ngāti Waewae Ruranga, acting on their behalf and on Francois Tumahai's behalf. We're still looking at options across there because this is a 13th century site. But they've been very positive in pointing us towards what they think is a solution for putting a stock bank house there. So we're very pleased with that, and we will be having a hui with them in mid-January, prior to what we intend to lodge the consent for Upper Bullers and Carters together. The preparation of that consent is very close, and we just want to talk a bit more with the Tangata Whenua, and there's a couple of other things to organise. But that consent preparation has been done at quite a fast pace, and we're still on the boil with it. Happy to answer any questions.
Any questions from the team? Okay, thank you, Peter.
Cheers.
The recommendation is recommended that the committee resolve to receive the report by the remover.
Yep.
Thanks, Chris. Seconder, Peter, all in favour? Against? Motion carried. So we'll move on to. We'll go back to 9.1 on our agenda. Okay, vesting of Organs Island. Can I hand over to Darryl?
Yeah, I'll hand straight over to Penny. I don't know who's been working on this for me. Thanks.
Penny.
You're on mute, I think, Penny.
Sorry, couldn't find the unmute button on the phone. So the report sets out the importance of Organs Island for the Westport flood protection, summarises what a local purpose reserve is and what the vesting of this means for council under the Reserves Act of 1977. It also points out the next steps for the vesting and notes that will be a comprehensive future paper brought to this committee. I don't think I've got an awful lot to add, so I'm taking any questions from you.
Any questions from the team?
So councillors, we're really just wanting your go ahead so that we can go back to the Department of Conservation to vest as a local purpose reserve the Organs Island as per the survey boundary, so that we can get into our administration and then proceed with what we need to do from a flood scheme perspective here.
Thanks, Darryl. Thanks, Penny. So the recommendation is, it is recommended that the committee resolve to 1, receive the report, 2, approve the acceptance by West Coast Regional Council of Department of Conservation vesting for Organs Island as a local purpose flood protection reserve, the council to manage as an administering body. We have a mover for that. Thanks, Peter. Seconder, Chris. All in favour? Right. Against? Abstentions? Abstention from Mark. Motion carried. Okay, we now move back to Mark.
That's affects me. Yep, thank you. I'd make a motion that we go into public excluded. Can I have a motion?
Moved.
You gonna? Yeah. All in favour?
Aye.
Going back into public included, I declare the meeting closed Tuesday, the 16th, the last council meeting for the year. Happy Christmas. Meeting closed at 10 to 3.
And can I just say on behalf of